Welcome back to Rich Resource, the only place where we strip away the market noise to find the high-conviction plays that actually move the needle for your portfolio. Today, we aren't talking about software or the latest chatbot. We are talking about the physical backbone of the AI revolution: power. The biggest names in tech, Nvidia, Oracle, and Microsoft, have a massive problem that money alone can't solve. The global power grid is dying. In this video, I'm breaking down why one specific company, Bloom Energy, is positioned to become the standard oil of the AI era. We're going deep into the tech, the billionaire-backed deals, and the math that leads to a potential $1,000 price target. If you want to build generational wealth by front-running the biggest infrastructure shift in a century, you are in the right place. Let's dive in. Let's start with the hard truth. AI is moving at light speed, but it's about to hit a massive physical brick wall. By 2030, data centers are projected to consume a staggering 16% of all U.S. electricity. To understand the gravity of this, you have to look at our national power grid. It is a relic of the mid-20th century. The average transformer in the United States is nearly 40 years old, and the system is already operating at its maximum capacity. Upgrading this infrastructure isn't just a matter of writing a check. It is a logistical nightmare. We are talking about a 10-year lead time for major utility hookups. If you are Amazon or Google and you want to build a new AI supercluster today, your local utility company might tell you to wait until 2035 to get the power you need. In the world of AI, waiting 10 years is equivalent to going out of business. This is where the market is fundamentally miscalculating the value of Bloom Energy, ticker BE. Most analysts still have Bloom labeled in their systems as a green energy or alternative fuel company. They are looking at the ESG scores while missing the industrial reality. Bloom isn't just about clean energy, it's about sovereign energy. Bloom's solid oxide fuel cells allow data centers to bypass the grid entirely. This is what we call behind-the-meter power. Instead of waiting a decade for the utility to dig trenches and lay miles of high-voltage cable, a company can drop Bloom's power in a box directly into their parking lot and have gigawatts of 24/7 baseload energy in a fraction of the time. In a gold rush, the person who sells the shovels makes money, but the person who provides the oxygen to the miners controls the whole mountain. Bloom is providing the oxygen. We are witnessing the shift from a centralized, fragile grid to a decentralized, microgrid future, and Bloom is the primary architect of that revolution. Actionable steps: the lead time advantage. Evaluate energy stocks not by their green credentials, but by their deployment speed. Speed is the most valuable commodity in the AI race. Grid independence. Focus on companies that offer behind-the-meter solutions. These are immune to the regulatory and physical delays of the aging national grid. Why is Bloom Energy specifically the perfect match for AI hardware? To understand this, you have to understand the language of electricity. Our national grid speaks AC, or alternating current. However, every computer, every server, and every AI chip on the planet speaks DC, or direct current. Currently, data centers have to take AC power from the grid and use massive, expensive, and heat-generating equipment to translate it into DC power for the chips. This process is incredibly inefficient. You lose a massive amount of energy to heat, which then requires more energy to cool down. It's a vicious cycle of waste. Now, look at Nvidia's new Blackwell architecture. These chips are power-hungry monsters designed to operate on 800 volts of DC power. This is where Bloom Energy has a technical moat that no one else can match. Bloom's fuel cells natively output exactly 800 volts of DC power. By using Bloom, a data center can skip the translation loss entirely. You plug the fuel cell directly into the server rack. This slashes electricity costs, reduces the heat footprint of the data center, and significantly increases the lifespan of those expensive Nvidia chips. The smart money is already voting with their billions. Larry Ellison, the founder of Oracle and one of the most successful tech visionaries in history, recently signed a landmark deal with Bloom. But here is the part the headlines missed. Ellison didn't just buy the hardware, he secured warrants to buy shares at a valuation that suggests he sees Bloom as a $27 billion cornerstone of AI infrastructure. When a man like Ellison, who is currently building the largest AI superclusters on Earth, bets his capital and his infrastructure on this specific technology, it's a massive validation signal. He isn't buying these boxes to be eco-friendly. He is buying them because it is the only way to keep his Nvidia Blackwell chips running at peak performance without melting the building or waiting for the local power company to catch up. Actionable steps. Watch the warrants. When a major tech leader takes an equity-like stake in a supplier, it indicates they view that supplier as mission-critical to their long-term survival. Technical synergy. Always look for hardware-energy alignment. The 800V DC match between Bloom and Nvidia is a technical advantage that is very difficult for competitors to replicate. Now, let's get into the part you came here for, the hard math. To understand how Bloom Energy could reach a $1,000 price target, we have to move past the daily stock charts and look at the gigawatt math. Global AI power demand is projected to claim nearly 50% of all new natural gas capacity in the coming years. Bloom doesn't need to capture the entire market to be a multi-bagger. They only need a realistic slice. If Bloom captures just 20% of the projected AI power demand, they would be installing roughly 10 gigawatts of power capacity per year. Let's run the numbers. At current industry rates, 10 gigawatts of installations would represent a 1,400% increase in Bloom's annual revenue. If we assume a conservative 30% net margin, which is typical for high-end industrial technology, and apply a 25x price-to-earnings (PE) multiple, we can calculate the potential earnings per share, EPS. Text, EPS. Barn nafrak, dan text, total net income. I text, shares outstanding. Under this growth scenario, we arrive at an estimated EPS of approximately $40 per share. Now, apply that 25x multiple 40 miles times 25 as 1,000 miles and I text per share, compare that to today's price of roughly $130. We are looking at a potential 7x to 8x return by the end of the decade. Is this guaranteed? Absolutely not. But in professional investing, we look for asymmetric bets. This is a situation where the downside is protected by existing long-term service contracts, but the upside is mathematically explosive due to the sheer scale of the AI energy crisis. The market currently prices Bloom like a struggling hardware manufacturer. The math, however, suggests it is actually a high-growth infrastructure titan. You are buying a utility of the future at a legacy hardware discount. Actionable steps, the gigawatt metric. Stop looking at quarterly earnings beats or misses. The only metric that matters for Bloom is the backlog of gigawatts. Asymmetric risk management. Treat Bloom as a high-conviction core holding. The potential 700% upside justifies the sector-specific volatility. Before you go all in, we need to talk about the catch. If the math is this good, why isn't the stock already at $1,000? The answer is simple: volatility and execution. Bloom Energy is not for the faint of heart. This stock is a high-beta beast that can and will drop 30% or 50% in a single month. Furthermore, the management team has a historical reputation for overpromising and under-delivering. They have missed timelines and struggled with scaling in the past. Wall Street has a very long memory, and institutional investors are waiting to see if Bloom can actually handle this massive influx of demand without breaking their supply chain. If you try to day trade this stock or time your entry based on the latest TikTok trend, you will likely get wiped out. To win with Bloom, you need a venture capitalist mindset. You have to be the adult in the room while everyone else is panicking over short-term price action. This is a 5 to 10-year infrastructure play, not a get-rich-quick scheme. The winning strategy here is disciplined dollar-cost averaging, DCA. You want to build your position when there is blood in the streets. My personal rule of thumb for high-conviction plays like this is the 20% rule. Every time the stock pulls back 20% from its recent 52-week high, you add to your position. When the media is screaming about an AI bubble or high interest rates, that is usually when the best entry points are created. Ignore the noise of the bears and the hype of the moon boys. Focus on the fundamental physics. AI cannot exist without massive power, and the current grid cannot provide it. As long as those two physical realities remain true, Bloom Energy is positioned to be one of the greatest wealth creators of our generation. Stay disciplined, keep your eyes on the 2030 horizon, and let the infrastructure supercycle do the heavy lifting for your portfolio. Actionable steps. The 5-year lock. Do not buy Bloom Energy with money you need in the next 24 months. This is a long-cycle infrastructure investment. Emotional neutrality. Use limit orders to buy the dips automatically. This removes the emotional hesitation when the market is red. That's the deep dive on Bloom Energy and the AI power revolution. If you found this breakdown helpful, do me a favor, hit that like button and subscribe to Rich Resource. We are building a community of sophisticated investors who care about fundamentals, not fluff. I want to hear from you in the comments. Do you think the aging power grid is the biggest threat to AI, or will big tech find another way around it? Are you buying the Bloom dip, or are you waiting for more proof of execution? I read every single comment, so let's start a conversation down below. Check the links in the description for our full report on AI infrastructure and the other hidden stocks we are tracking for 2026. Until next time, stay disciplined, stay informed, and keep building that resource. I'll see you in the next one.